Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, January 14th, 2026, and here is everything you need to know as the markets close for today. The Indian stock market finished in red today, wrapping up what turned out to be a particularly volatile session ahead of a trading holiday tomorrow. The Nifty 50 closed at 25,665, down just under 67 points or 0.26%. The Sensex shed 245 points or 0.29%, settling at 83,382. Bank Nifty meanwhile ended at 59,580, down marginally through the day's volatile range-bound trading. Overall, the sentiment was cautious and defensive, as investors remained wary of global tariff concerns and continued foreign fund outflows that's been plaguing markets for weeks now. What made today particularly tricky for the Sensex specifically was the preponed weekly F and O expiry. You see, because of Maharashtra's municipal corporation elections scheduled for tomorrow, the exchanges shut down on January 15th, which means the weekly Sensex derivatives expiry that normally falls on Thursday got pushed forward to today, Wednesday. This created a concentrated flurry of position squaring and short covering that kept volatility elevated throughout the session, even as the underlying fundamentals remained uncertain. Traders were forced to either close or settle positions much faster than usual, adding to the choppy price action we saw all day. On the foreign exchange front, the rupee actually strengthened today. The USD-INR pair closed at 90.12, reflecting a 0.18% appreciation of the rupee compared to the previous session. This was a bright spot for importers, though it doesn't change the broader narrative of RBI's constant tightrope walk to prevent excessive rupee weakness amid persistent foreign selling and global policy uncertainty. Now let's look at which stocks led and lagged today. On the bullish side, the metals complex shone brightly. Tata Steel surged 3.71%, making it the day's top gainer in the Nifty, followed closely by Axis Bank, which jumped 2.97%. Other strong performers included ONGC at 2.70%, NTPC at 2.56%, and Hindalco at 2.7%. The broader metal sector actually rose 2.7% as a category, supported by global commodity strength. Oil stocks like ONGC also benefited from crude oil climbing to a 12-week high, sitting around $65.89 per barrel today, as geopolitical tensions in Iran continue to support prices. On the flip side, weakness was concentrated in IT and select financial names. Tata Consultancy Services dropped 2.36%, Asian Paints fell 2.01%, and Sun Pharma declined 2.18%. The IT sector as a whole was down 0.5%. Now here's the interesting part on the IT side. Infosys did announce Q3 results today with mixed signals. Net profit fell 2.2% year-on-year to 6,654 crore, slightly missing profit expectations, though revenue beat at 45,479 crore, up 8.9%. However, management raised FY26 guidance to 3 to 3.5% from 2 to 3%, citing strong AI-led deal wins of $4.8 billion. So while the backward-looking numbers disappointed, the forward guidance offered some solace to believers in the AI story. Autos and realty also underperformed, both down roughly 0.7 to 1%, as traders shifted focus away from growth plays amid concern about slowing global demand and a possible slowdown in discretionary spending on the back of IT layoff concerns. Looking at important technical levels that traders will monitor going forward, the Nifty's immediate resistance sits at 25,800, while the critical support to watch on any downside is 25,600. A breakdown below 25,600 could trigger accelerated selling. For Bank Nifty, the immediate resistance is up at 59,800 and the key support sits around 59,300. Sector-wise, metals, PSU banking and energy led gainers up between 0.6 to 2.7%. Auto, IT and realty lagged as net sellers continued to pressure momentum plays. PSU and state-backed names found some demand from domestic institutions today, with Union Bank jumping 8% on strong Q3 profit numbers, while Puravankara, the real estate player, actually managed a 9% surge on better-than-expected business updates, showing strong collections growth of 22% year-on-year. On the commodity front, precious metals had a stellar day. MCX gold hit an all-time high of 1,43,340 rupees per 10 grams, up roughly 0.75% from the previous close, with silver also surging sharply to 2,90,000 rupees per kilogram, a 3.92% jump driven by ongoing geopolitical uncertainties and safe haven demand. Crude oil, as mentioned, moved up over 1%, settling around the 65.89 mark per barrel on tensions in Iran and concerns over supply disruptions, all of which are proving supportive for domestic oil producers. Geopolitically, attention today remained fixed on Iran tensions, which have been the primary driver of crude oil strength and safe haven flows into gold and silver, an especially relevant situation given the high energy import dependency of India's economy. Going forward, with the market shut tomorrow on account of Maharashtra's civic elections, traders should keep an eye on Gift Nifty futures pricing for the next session, though momentum appears to hinge on global cues, particularly what happens with US tariff policy. The US Supreme Court's ruling on President Trump's tariff legality continues to loom over sentiment, and until there's clarity there, expect defensive positioning to persist. For the next day open, the Nifty will likely need to hold about 25,600. The resistance at 25,800 remains an uphill climb unless we see a meaningful shift in the FII flows or a reset in tariff expectations. The broader narrative suggests traders should stay light on leverage, especially in momentum plays like IT and autos, and instead look for value in metal and PSU banking names where valuations offer more margin of safety. Here's your actionable takeaway for today. Metal stocks showed real strength today on global commodity support and geopolitical premiums. If you're looking for defensively positioned plays with upside, metal and PSU bank index trackers or selective stock picks in this space could offer a balance between safety and opportunity in a market where global headwinds persist. Lock in your watch list today, keep crude oil prices and geopolitical developments on your radar, and stay ready to reposition if we get any policy clarity out of the US. That's all for today's wrap. Thanks so much for tuning in to What Moved the Market. Remember to send in your questions and trading observations on social media, and do join us back here tomorrow for a full market open and morning session update as we kick off a fresh trading week. Until then, stay sharp and keep your portfolios balanced. This is Prem signing off. See you on Friday the 16th.